Okay, limiting option losses and how I keep losses down in my accounts. And this is going to be a brief summary of what I do to keep the option losses down, because when you're trading options, you will have some losses. Some stocks will go the other way. Some trades will go the other way. So you want to limit those losses and keep them down in your account. First thing you would do is research and technical analysis. And that's very important. Research the stock or ETF that you're trading. Know how it moves. Know the basic fundamentals of the stock or ETF. That does matter. You do need to have the information there so you'll know the highs and lows of the stock. If it's in a bullish trend, if it's in a bearish trend, you need to know this in order to keep your losses down. And the next thing I also do is only trade high volume stocks and ETFs. If you only trade high volume stocks and ETFs, it provides you with more liquidity, because you want to be able to exit your trade. So if there's more volume on the stock or ETF, you will be able to exit the trade, either selling it off at a loss, selling off at a 50% loss, or you don't have to really worry about it going down all the way down to zero. Sometimes it will, depending on what happens in the marketplace, or some news about the stock, or it's in a sell-off, because there will be sell-offs. Stocks don't always go straight up, and they sometimes don't always go straight down. So you need to trade only high volume stocks and high volume ETFs. And also keep your emotions in check and don't get greedy. So you really need to keep your emotions in check when you're trading, because a lot of times people get greedy and they put way too much money in one stock. So keep the cost of each trade around 5 to 10% of your overall account, and don't put all your money in 1 to 2 trades, because if it goes down, that's all your money, so you need to keep it spread out, and don't put all your money in 1 or 2 trades. And the next thing I do is I keep cash in my account, and I try to keep at least 25% of cash, whatever the balance is. I try to keep at least 25% of that amount in cash for trading and buying opportunities. And also it lets me hedge a little bit. If the market drops, I still got 25% of that in cash, and I try to stay disciplined on that amount of 25%. Sometimes it'll drop down to 15% if I just feel like, based on my research, I'll see that there's some opportunities, but mostly it will stay around 25%. And another thing you want to do is avoid selling naked calls and naked puts. You want to avoid selling those, because unlimited losses can result if you sell naked calls and naked puts. Because if the stock goes the other way, and you're gonna have to recover whatever that amount is, and you want to avoid that. Most brokerages won't even allow you to sell naked calls and naked puts. They want to either cash there, or you need to buy the stock in order to do that. So just avoid selling any naked calls or naked puts, because it can really put you in a losing position if the stock goes the other way. And another thing, don't trade during earnings weeks, because you never know where the stock can go. It can go in any direction. Sometimes I've gotten lucky by trading in earnings weeks and made a lot of money, and a lot of times I've lost because of trading that stock during the earnings announcements. And you want to don't do that, because I'm telling you, there's other ways of trading options during earning weeks, and we'll get to that. But basically, you just want to wait afterwards, after the earnings announcements, and then come in and trade. And a lot of times you need to know when to cut your losses, because they will happen. And if the stock drops 50% or more, that's usually when I start to cut. Okay, I'm gonna cut this loss. I'm gonna take my loss and just move on. So I cut losses around 50% or more. So that's, to me, that's a better strategy instead of waiting out. Now, if it's around 40, 30, I'll try to hold it and see where it's gonna go, if it's gonna come back so I can break even. But around 50% is where I cut my losses. And also, what you really have to have is patience. You need to be patient, because a lot of times, sometimes the market is moving sideways, sometimes it's not, it's going down, but you need to be patient and stay consistent. Stay consistent on your trades, stay consistent on your research, and remember that you will not get rich overnight. I mean, sometimes you'll get lucky, like I showed you where I made bought a call for $128 and it turned into $4,000 with that AMC. Sometimes we get lucky like that, but that's not all the time. So be patient, stay consistent. You will not get rich overnight, and sometimes you will get lucky. And just to recap, like I said before, research and technical analysis matters. Trade only high volume stocks and ETFs. Keep emotions in check and don't put all your money in 1 or 2 trades. Keep 25% of the amount in cash. Avoid selling naked calls and naked puts. Don't trade during earnings announcements, and cut losses when the trade declines 50%. Be patient, stay consistent. So that is the recap, and I hope you like this presentation. Please comment, and let me know what you think.